All right. Sorry for the late start. I was just getting ready to push the button, and I went and grabbed my bottle, and water went everywhere all over my desk. And then you know how you go and grab a towel, and you're like trying to wipe it up, and the towel's not absorbent, and it's just pushing it everywhere. I had one of those. I had one of those moments, right? When I was supposed to turn on the computer and come and talk to you guys. So I had a little moment there for a minute. All right, so we're going to be good. We're good. I got it kind of cleaned up. The floor's still all wet, but at least my desk is dry. Okay, so let's get started. First thing I want to talk to you about, is Bitcoin safe anymore? The big banks move in. What actually happened? C-Boss says, I actually think bail on Bitcoin right now. Insane amount of resistance near 100 levels. I bailed on Bitcoin 2 days ago. I took it off as soon as I found out that the bill in Congress failed. I went right in and boom, took it off right there. A lot of the things you can't do, you can't trade on the weekends, right? I think it was Sunday, because Monday was a holiday. I knew the markets were closed. Sunday, I think it failed on Monday night. I think I did it like Monday night. I took it off. I had like $100,000. I had one Bitcoin, one full Bitcoin, right? And I took it off. Let's go take a look. Let's go take a look at it. Let's pop on over here. This is Bitcoin. This is what it's been doing. It's flushed down here. It's flushed way down. So I got out of Bitcoin. Well, I lightened my load on Bitcoin right in here, which wasn't actually Bitcoin. It was just Misty, but I took it off because of tax loss harvesting. But I then, when it came down a little bit farther, I bought some Bitcoin right in here. I bought one whole Bitcoin. If you guys remember coming to my class, I bought one whole Bitcoin right here. And then when we got the bad news that the bill that they were working on in Congress failed, I just took it all off. I was like, too much volatility to me. So I took it off with a $500 profit. So I made $500 on it. But it's sad because I believe in Bitcoin to some degree. I mean, am I one of these Bitcoin hardcore Bitcoin guys that's like never sell, never sell? Well, obviously not, because I'm a trader too, and so I trade with stops, and I keep things close to my chest. So I'm out. I'm going to show you my portfolio. I made some other big changes today too, and well, over the weekend, today and last week. So I've made some adjustments to my portfolio, and I'm going to show you. Going to show you what. Ooh, things are stinking over here with my mess that I made. All right, so let's come in. This is Bitto, and that's what I did. I took it off. So let's go look at my spreadsheet. I want to show you my spreadsheet and show you how that turned out. And but before, well, actually, I've got something else planned for you. Before we jump into the spreadsheet, let's go over and talk about what happened in Congress. All right, what's going on and why the volatility and why I took my Bitcoin off. Now, the reason I was mentioning that the markets were closed was because of the holidays and the weekend. And but Bitcoin, you can trade 24 hours a day. So I went in Sunday. I think it was Sunday morning. Might have been Friday night. Friday night. Markets were closed, but on Bitcoin, you can trade anytime you want. So I went in and sold all my Bitcoin, and so I didn't have that big hit today, fortunately for me. And so that's what happened for me. I didn't have that big hit. I closed mine out with I was up like $5,000 at one point with that trade, but I took it off at $5. When I heard that the market had already flushed, and I went in and hit it, and I at least got out with a $500 profit. So I didn't take a loss on my Bitcoin. But let's read what's going on here. Now, I came in, this is Grok, and I asked Grok, I said, give me a summary of what's happening on Capitol Hill with the big banking bill and crypto fight. Bullet points for easy digestion, keep it simple and understandable, and explain why Bitcoin is flushing lower. All right, so the crypto bill overview. A major cryptocurrency regulation bill, often called the Clarity Act on Digital Asset Market Clarity Act, is being debated in the U.S. Senate. It aims to set clear rules for digital assets by classifying them as securities. overseen by the SEC, or commodities overseen by the CFTC, shifting some powers away from the stricter SEC to make regulations friendlier for the crypto industry. Recent delays. The Senate Banking Committee, led by Chair Tim Scott, planned a key markup session debate and vote on the bill on January 15th. So that was 5 days ago, but postponed at last minute after strong pushback by Coinbase, which I had a bunch of Coinbase, actually Coney, right? Coney, which is the YieldMax version of Coinbase. So Brian Armstrong, who called it material worse than the status quo on X, said his company could not support it. And that's what killed it. That's what did it right there. The big fight, banks versus crypto on stablecoins. The core conflict is over whether stablecoins, crypto pegged to stable assets like the US dollar. Now, cryptocurrencies, as you guys all know, are digital money. And they have to have some sort of underlying basis of value. And most of them are being pegged to the US dollar, but many of them are being pegged to like the treasury bonds. And so they're basically like holding treasuries, all right, in a sense. So that's kind of how they're pegged. They're pegged to the treasury or the US dollar. That's why they're called stable coins, because they're pegged to the US dollar, which is kind of odd to me. It's like having a US dollar digital currency. That's what they are. All right. So you can pay the stable coins, crypto pegged to stable US dollar, can pay rewards. Here's the conflict. The conflict is over whether they should pay rewards, or in other words, interest. Can you get interest for holding your stable coins? And guess who doesn't want you to be able to get interest if you hold your stable coins? Banks oppose this, arguing it mimics banking without the same protection and could pull deposits away from traditional banks, hurting the funding. Crypto firms want rewards, or the ability to pay or receive interest allowed to attract users. The latest bill draft restricts these rewards on exchanges, which banks see as a win. But crypto leaders like Armstrong argue it harms innovation. All right, so that's the big fight. So you got Democrats, who are all bought and paid for by the big banks, and you've got Republicans who are promising to support stablecoins. And those are the big fights. So Elizabeth Warren, we all know, she represents the big banks, and she hates anything crypto. And that's why she hates everything crypto. She's been bought and paid for by the big banks. They come in and lobby her, and she goes in and she speaks on their behalf. All right. And whether you think that's the right way it should be done or not, that's the way it is. Lobbying, they keep her in power. They give her money at elections. And so she represents their desires. And so that's why she's such a big voice against anything crypto, because she represents the big banks. They have put her in power. They're the ones who fund her campaigns. That's why she's a senator, and that's why she stands up so strongly against anything crypto. So if you kind of keep that in mind, what's going on there, you get the other side. Tim Scott, on the other hand, who is a Republican from South Carolina, he's all about the cryptocurrencies. He wants to represent the crypto industry. Now, the difference is that the crypto industry has a very tiny lobby and the big banks have a huge lobby. I think it was like, what was it? I saw the numbers and it was like 2.5, or it was some ridiculously low number, like $2.5 million lobby for the cryptocurrencies, and it was like $500 million lobby for the banks. All right. So that's what's going on. So it's a fight, and that's why you have the different sides, because they represent their constituents. All right. So not saying one side is good and one side is bad, just telling you that's who they represent, and that's the fight that's going on, and that's who they're fighting over. All right. Lobbying and negotiations. Crypto, I guess I don't have a horse in the game. I guess I'm a little bit more crypto. I would rather see the crypto side beat the banks. I'm not a real big fan of big banks. I think that they're kind of in my opinion, they're kind of the deep state. If you want to say a deep state, and we all hate the deep state, everybody hates the deep state. Well, the deep state, these giant banks, that's kind of they're the deep state. Well, they make up the Fed, right? What is the Fed? And the Fed, we all hate the Fed. The Fed is nothing but a big conglomerate of all these big banks. So if crypto can come in and take some of the, stabilize the currency and take some of that power away from the banks, I guess I'm for that. All right. I guess I'm for that. So I guess I'm on the crypto side. All right. Crypto has ramped up influence after the 2024 elections, pushing for looser rules, but banks have fought back with heavy lobbying. Bipartisan talks continue with possible revisions and new market potentially in January and February. So we've got some time because they've delayed it. Now we got a lot of indecision. Markets hate indecision. All right. So indecision is bad for markets. The Senate Agriculture. Now, this is what's weird. Look at this. The Senate Agriculture Committee. What in the heck are they working on a version of cryptocurrency for? But they progressing slowly amid these disputes. I don't know why agriculture thinks they need to get involved and start writing cryptocurrency bills. That makes no sense to me. Maybe somebody can explain why agriculture thinks they need to be involved in that. All right, broader context. This bill is part of a push for U.S. crypto clarity to compete globally, but delays risk. The U.S. falling behind. No full vote yet, and it's unclear it'll pass soon. I'm not really worried about the delay having the U.S. fall behind in cryptocurrency. We are the world financial center. If we delayed a couple months, it's not going to hurt. It's not going to hurt anything. Everybody's just waiting for us anyway. I mean, you got the BRICS, but they don't have anything to do with BRICS isn't digital, right? I mean, everything's digital nowadays, but BRICS is based on gold. It's gold backed, which is why gold shot up. All right. So if we go look at our portfolios here in a second, we'll pull up gold and I'll show you that our gold portfolios went up. All right. So why is Bitcoin dropping? Bitcoin fell sharply from around 95,000 to below 91,000. That was a $4,000 drop on January 20th, 2026, amid a global sell-off in risk assets like stocks and crypto. The main trigger, they're saying, now, Grok is saying the main trigger for that is escalating U.S.-European tensions over Greenland. I don't think so. This was direct. I think that's a little bit of a stretch saying that Bitcoin dropping was because of Greenland. Sorry, Grok. I don't agree. I don't know where you got that. Crypto dropped because of this bill. But that, let's read what he says anyway. President Trump threatened 10% tariff on EU, NATO countries, including Denmark, which controls Greenland, unless they allow U.S. purchasing, sparking fears of a trade war. This uncertainty makes investors nervous, pushing them towards safe havens like gold. But Bitcoin is considered digital gold, so it would push them towards Bitcoin, not away from it, if this were the case. That's why I don't like this argument. So gold hit new highs while dumping risk on assets like Bitcoin. Now, yes, Bitcoin's risky, but it's also a safe haven. It's considered a digital gold safe haven. Although gold's been going straight up and Bitcoin's been going straight down. So there is that. So I don't, maybe my argument doesn't hold water. Other factors in BTC and Bitcoin drop. Broader market fears include potential EU retaliation tariffs up to 95 billion euros, sticky high U.S. interest rates, and geopolitical risks. Even big buys like Strategy, that's Misty for us, right? 2.13 billion Bitcoin purchase over the counter to less immediate price impact couldn't offset the panic. Analysts see this as a short-term correction. Short-term correction, with some predicting further dips down as low as 80,000 or lower if tensions worsen. And do you think tensions are going to worsen? If this is the reason why Bitcoin is dropping, do you think tensions are going to worsen over Greenland, considering that the EU just sent in troops? I think tensions are going to continue here. I think it's going to be pretty tense. I don't see any resolution to this anytime soon. And so, yeah, we may see a dip down to 80,000 if Grok's on point here. All right, so let's come over and take a look. Let's take a look. So here we are looking at, that's my portfolio. I want to go over. So this Bitcoin. Let's go look at Misty, because Misty, now I dumped Misty a while ago, again, personally. Now, I'm not here to tell you guys what to do. I'm just telling you what I do. So when I'm telling you what I'm doing, I'm just telling you what I'm doing. You guys can do what you want. I just tell you what I'm doing. And I'm not always the best. I'm not always right. I mean, I did last year, my portfolio did 62% annualized return. I thought that was pretty good. All right. So that's who you're talking to, somebody who did 62% last year, primarily with yield max funds. All right. That's what I did. I've mostly invested in yield max funds and got those high yields. And so 62% was a pretty good return. Now I'm down from that. If you want to go see, let's go look at my spreadsheet. So right now I'm at 56%. I ended the year at 62%. I'm currently at 56%. So the markets have been flushing. Now here's what I did. Now, if you joined my class last Thursday, I talked about the class last Thursday. We talked about hedging, right? If you remember, this was the little marquee that we talked about. This was the class title, Portfolio Headed South, My Hedging Strategy. And I vowed to try and do a little bit better this year. I've tried to do a little bit more hedging and not just sit and rely on all of the dividends to cover my losses. Now, that's basically how we run these markets, right? We buy into the market. Let's just use an example here. This is OARK. I put 50,000 in. The value is 45,000. So I've lost $4,700 on the NAV. But I've made $5,800 on the yield, so I'm up $1,000. That's how that works, right? So now we're going to come in and say, well, Land's got Palantir. Now I had $200,000 in Palantir. I lightened my load on Palantir, and it's only worth $64,000. So I've lost $39,000, but I've made $91,000. All right. So I'm up $52,000 on Palantir. So that dividend has really done well. But with the market going down, let's go look at Palantir. Palantir. We all love Palantir. Now, remember, I got multiple accounts. This is just the one account that I trade publicly. All right. So Palantir, I think Palantir's got some more downside potential. I think it's a little double top up here. This right shoulder was a little bit lower than the left shoulder. I think this is a head and shoulders formation, and I think we got a little bit downside potential, especially with the overall longer term market showing a little weakness, and now especially with all these troubles that we got going. Okay, so here's a little head and shoulders pattern. Right, there's a little head and shoulders formation, and so that means that little neckline right in there is about here at the 200 period moving average, and I am not real. I'm going to push this, it's actually technically right there, these two lows. But if we push this up, I'm going to push it up to the bottom of that. Why are you doing that, Land? I just am. All right. So that brings us right in here, right where that blue dot is. I think that's kind of that's a decision point, right? What we call decision point trading right there. And I think the decision that I've made is that this market's going to go down some more. So how much is it going to go down? Well, nobody knows, but this is a topping formation. And if we come in here and look at our model, right? We look at our model. Come on, model. This is what we're looking at. All right. So we got our accumulation zone down in here. We got the big rallies up through here. We got the little hesitations in there. We got this topping formation right in here. We got this little head and shoulders. We got the high point right there. We got the retracement right there, and it's coming down off of that neckline right there. I think we're going to get a retracement. I think we're going to come down to the Delta Cone of probability. Is it going to come all the way down to the Delta Cone of probability? I don't know. Palantir is a really strong market, but that's the pattern. And so this is the pattern that we're looking at right here. And you can see the Delta Cone of probability is right here. All right. That's the Delta Cone of probability. And that means that the very first level is 38.2. Now, we haven't broke the neckline yet. And I sucked the neckline even up in there further, right up to the bottom of that low bar close. I didn't put the neckline clear down here at the actual low. I put it just at the close low. And so that brings us up into these levels here. But this one I did put clear to the low. See, I could come in and put that one at the bottom of the close low right there, and it gives us a little bit different number. But I kind of like this one here. Put it where I want it. So I've got a little area of support here. I got this level here. I got this level of support here. I got this level of support here. So I'm hitting more trend lines. So that's why I justify it. But anyway, nonetheless, this is where our target is. This is the 200 period moving average. If we look at the 200 period moving average, and we just say, well, let's extend that. That's where we got another target level here. We're bouncing off basically the the 100 right here. We broke the 100. We broke the blue lights. Now we're coming back. And this is the decision point. Do you think it's going to turn around and go back up? Very well could. It could turn and go back up. Nothing saying it can't. And Palantir's strong. People don't like to give up their Palantir. But you know what? We're traders. We're not investors. So I expect this thing to come down a little bit farther. I didn't dump it out completely. I've still got some. I've still got some Palantir. Let's go look and see how much. I got Palantir. I put 103,000 in. Or I actually had 200,000. I lightened my load today. Today I took off 50,000. I took 100,000. Actually, I took $96,231 off. $96,231.37 is what I took off this morning. So that gives me 64,000 is what my value is. So you can see I've lost 39,000, but they've given me 91,000 in yield, so I'm up 52,000. So 52,000 is my profit on this one. I haven't got any that I'm losing money on right now. See, I've got made 5,000 on that one, 27,000 on NVIDIA, 1,000 on OAR card, 52,000 on Palantir, 1,000 on that is the one we got to go look at, and this one we got to go look at. But that's where I'm at with these funds. All right. So let's go look at AMDY. We can look at that one quick. AMDY, AMD is the underlying. So look at that one. And see, it's taken off. So it's doing well. I didn't liquidate any of that one. AMDY. The only thing I wished I would have probably had a little bit more money on that one. So this is AMD. And we could probably put some money into AMD. Probably do that after this class. You see AMD, I've only got 50,000. 50,000. AMD, I didn't start trading AMD until October. I had some in here back in January, but then I got out of AMD all through there. And then in October, I put in 17, or I put some money in, and I got 1,700 in dividends, 600 in dividends, 1,000 in dividends. And now AMD, so far in January, I've got 1,200 in dividends. So it's doing well. AMD, I've got 1,200 in dividends so far this year. So AMD, $5,000 total yield, 5,000, because it's sitting right at the NAV is positive $13. That's it. NVIDIA is giving me a little stress right now. So let's go look at NVIDIA. So AMD is a good one. NVDA. Let's look at NVDA first. See, it's tough. I lighten my load on NVIDIA too. I think I'm going to put it into AMD. Right now it's sitting in cash. So NVIDIA, I've got 55,000 in NVIDIA as NVDY. It's currently at 42. So I've lost 13,000 on the NAV, but they've given me 41,000 on the yield. So I'm up $27,000 on that one. I probably should put some of that NVIDIA that I took off this morning and put it into AMD. Right now it's sitting in cash. You can see I've got $141,000 in cash. Let's go look at OARK. OARK. Where is it? It's OARK. That's the yield max version. I want the ARKK. There it is. So that's Kathy Wood's fund. And it's getting ready to flush out. I want to show you these patterns. And I'll come back to this here in just a second. But I want to show you these patterns. See these little triangle wedge formations? And of course, this one here, again, brings us into, where did it go? This pattern here is very much here. We got the accumulation down off the screen. We came up through this first run here, the second run here, and we went up to the peak. Then we got the flush out. Now we're going through this point right here, and it looks like to me we're going to get another flush down to the 200 period moving average, get down in here. So ARKK, we're going to have to anticipate the possibility of this thing coming down. That's the 200 period moving average right there. So there's 200 period moving average. We got this gap right here to fill. Now the question is, do we believe in Kathy Woods and her trading abilities to keep this thing going? Now, even Kathy Woods has down days. Markets go down, everybody loses, even Kathy Woods. All right. So Kathy Woods, who's Kathy Woods? She's one of the top fund managers in the country. She's the one who manages this fund. Now this is again, we've got the little head and shoulders pattern coming in here. All right, so there's a head and shoulders pattern. This is the descending head and shoulders pattern. I always hate descending head and shoulders patterns. That's why I keep trying to adjust it so that we can get at least a neutral head and shoulders pattern in here. But you can see across there, that line is clear down here. That's just a target zone. And then if it breaks that, we're into negative territory. And if we come in here, and of course, we draw our Fibonacci ruler and get the delta cone of probability in here, that means that we got some downside potential down into this region here. So OARK. All right. It's good to see you, Kirk. Glad you could make it. Rock's asking, how many yield max funds am I still in? That's what my spreadsheet shows you. So right now, and it's I actually have I have my other account. It's smaller. It's my retirement account. So it's a 401k. And it's a little bit different than the one I trade here publicly, but not much. I keep them they're pretty close. But this is where my money's at. I'm in AMD, I'm in NVIDIA, OARK. That's the one that's giving me a little stress right now. Down 45, and it's not giving me, I'm up $1,000 on it. The dividends are not that great on it, and it's losing money. So the NAV is going down. The dividends can't keep up with it. The question is, do I lighten my load while it falls, or do I just hold on and hope that the yield hangs on, that it eventually stops falling and the yield can catch up and cover my drawdowns? That's the question. Palantir, I had $200,000 last week. Now I have 100,000. So I lightened my load by 100,000. Okay. So current market value 64. I'm down 39,000. Yield is 91,000. I'm not going to get that kind of yield, not when I take 100,000 of my 200,000 off. So that yield is not going to maintain, but I also shouldn't have the drawdown. So the percent equal should equal out. The question is, will my dividends pay for my drawdowns? At this point, well, I want to show you my hedge, because remember, last week we talked about hedging, right? Portfolio headed south, my hedging strategy. And I promised myself I was going to do more hedging this year. Didn't do any hedging last year. So now I've got a hedge going on. But before I go to the hedge, I'm going to show you the last thing I want to show you. I want to show you my hedge. You can see it right there. It's $250,000 hedge, all right, to the downside. I'm going to show it to you. But let's go look at gold first. This is our gold. I've got $24,999.97 in gold. Market value is $26,000, so I'm up $1,000 on my gold. I've received a $900 in dividends on gold. We'll get more this Friday, so I'm up $2,000 on my gold entry. All right, which is just barely got in here. When's that one? GDX. My first one was in December, so you can see I got a small dividend in December. GDX, we've got a small dividend so far in January, $612. That's all we've got. So for a yield, that's $900. Now, let's go look at it. Let's go look at gold, because gold's taken off, right? Gold. Let's go look at GLD. Look at that. So we got money in gold. So Bitcoin's going down, gold's going up. So I guess they're working inversely, as Grok said. So look at that's what gold did. Crazy. Now, how much do we have of that in GDX? We only have $25,000 in gold. And we only put it on back here. Well, we put it on about that red arrow right there. So we've ridden it up a little bit. So we made a little bit in gold. All right. Do we have any silver? No, let's go look at silver just real quick. SLV. SLV is going straight up too. See if it's popping with gold. Yeah, see, there it goes. So silver's up big. Now, here's what I did. I made a mistake. I'll admit it. I made a mistake. Right here, I went in to I was going to put $50,000 in silver. And I said, why would I put it in silver when I could put it in Bitcoin? And Bitcoin does a lot better than silver, usually, historically speaking. So I went and put it in and bought the rest of my Bitcoin. I put another, it was like $25,000 into Bitcoin, thinking, well, Bitcoin's going up, and it generally does better than silver. And I was wrong. Fortunately, I got out with a $500 profit on my Bitcoin, but look at what I missed. I didn't get into silver. I sacrificed my silver purchase right here because I was like, wow, it's, you know, when markets are, it's sitting right there. It looks really high, but it's a little pullback. It's a little one of those little triangle wedge patterns. And so, you know, we like to trade those little wedge patterns. And I didn't put it into silver, and I was going to. And I put it into Bitcoin instead, which was a mistake. You want to put it in right there? No, not really. It's breaking new highs. But look at that. It's been breaking new highs this whole time. I think I just terrible. I don't like to buy high, so I just don't buy high. I'm not a guy that buys high and sells higher. I'm a guy that wants to buy the pullbacks, and I didn't do it. I was doing other things, right? So that's silver and gold, silver and gold. Now there's no yield max for silver. Okay, all right, let's go look at the hedge that I did put on. All right, so we're going to come back to the spreadsheet. Now here's where I've put 250,000. I've still got 140,000 in cash. So my hedge is to the downside. This is a hedge, meaning that if markets fall, it makes money. Now I've got $250,000 in here, and because there's not a direct hedge for many of these, and you'll see that I actually put some, oh, I thought I had that in here. I also put on a, oh no, I didn't. I bought some crash to hedge my Tesla, but it's not in this account. I don't have Tesla in this account because I took it off for tax loss harvesting, and I'm stuck. I can't get into Tesla again until 129 because I have to stay out for 30 days. But Tesla's going down, so I'm not feeling bad, except for I had a little bit of Tesla over in my other account. So I took that Tesla off, the long Tesla, and put it into the short Tesla, the crash. It's not going to show up in this spreadsheet because it's over in my other account. So I don't have Tesla and crash over here, but I did take some Tesla off. I took 25% of it off and put it into crash, which is hedging the short side. Remember, I promised I was going to try and do more hedging this year. We're going to see if it turns out to make me more money or not. Right now, I'm at 56% annualized return, and I was at December 31st at 62%. So I'm actually down 6% since the end of the year on my trades. All right, I guess that's the way the cookie crumbles. We got to get some dividends coming in, don't we? Just time will tell. But I've got smaller amounts of dollars in here, so I'm not going to get very big dividends. But I've got this one great big huge hedge. All right, let's look at the hedge. I think we might go back down to touch critical levels of support for Bitcoin. Banks and BlackRock want all of it, not just some. Every single Bitcoin. Yeah, it's true. They want to control everything. The banks. They want to control it all. Of course, they want to control it all. So they're trying to get all the Bitcoin they can, and they're driving it lower to do it. And they've been trying to put MSTR out of business because they want all his Bitcoin too. We had that conversation a couple of weeks ago, right? All right, let's go in and look at my hedge. I've got $250,000 on YQQQ. Why? YQQQ is the short side. This is YQQQ, and it's been going straight down. Lan, why would you put $250,000 in that market right there? Lan, why did you do that? $250,000 in that market? Yep, that's what I did. Why? Because it's a hedge, but it's also a pretty large position because I was hedging initially, and then I lightened my load here. So 250, I got 100, 250. I actually got $300,000 in long positions, and now I got $250,000 in short positions. So I'm hedged. I'm hedged almost a little bit, not quite perfect hedge to the downside, but I'm hedged. And the reason I'm doing that is because this is the one I'm in, YQQQ, which is the short side of QQQ. Let's go look at QQQ. This is QQQ. This is the Qs, right? NASDAQ Qs, the NASDAQ 100. So here's the pattern I'm looking at. Look at this pattern. All right. This is a perfect little wedge pattern, just like that. And I got in right here. I got in, I put some money in today. I put like another $75,000 in today, but I put 150,000 or something in right up in here. So I got pretty good. I've got a pretty good entry. So if we go to YQQQ, that yellow line right there is my price that I got for YQQQ right there. See that? So I got that little bounce, which is, if we come in here and look at my YQQQ, I put 250,000 in. It's worth 2,500, and I'm up 1,381. I've got no dividends yet. We're going to go calculate dividends. I can show you what the dividends are. All right. So if I get a dividend on this thing, which I will this Friday, I'll get a dividend. I didn't get the last one. I had it in, I put it in on Thursday, and that wasn't early enough. I had to have it in on Wednesday to get the Friday dividend. So I missed the dividend on Friday, which was a little disappointing because that was $100,000 that I had in there. I missed it by one day. It is what it is. All right. I'm going to catch the dividends on this Friday on 250,000. We'll go calculate that here in just a second. We'll see what that is, what it's going to be. But that's my downside protection. Now, what am I betting? I'm betting that the QQQs are not going to go up. Where's QQQ? All right. So that's what I'm betting. I'm betting we're going to get a drawdown on the Qs. Now, why am I betting that? I'm betting that because if you go read my book, do you guys have my book? Where's my book? I got it pulled up here. Here's the book. This is my book. You go get it on Amazon. All right. But I'll show you the cover here in just a second. Just go search Lan H. Turner. And there it is. There's the pattern right there. It's in my book. We talk all about it. We talk about lots of patterns. You can see over here. We talk about when those patterns are important, when they're not. We talk about all kinds of things in this book. All right. We talk about recurring price patterns. We talk about Fibonacci, Elliott Wave, delta cones of probability. We talk about the Fibonacci bow tie, which is the single most important pattern you can understand and know, which is why it's on the cover. Actually, it used to be on the cover. It's now on this cover. It's on the slides. Here it is in the slides. This is the supplemental. Some of you guys have the supplemental. So here's the pattern right there in the supplemental, ascending triangle right there. See that? We talk all about that. Okay, we talk about it in a longer detail. Now, this is the long side, but this is the short side. So the market's actually doing short side. There it is, ascending triangle. See that baby right there? That's what we're trading. That's why I'm getting into the QQQs right now. I'll show you the cover of this one. See that? Right on the cover. Decision point trading beyond Fibonacci. There's the Fibonacci bow tie on the cover of the book. And this is not the book. This is the supplemental. All right. So it's supplemental to the book. The book is this one. This is the book. Now, this is what the cover looks like. Go get it on Amazon. If you want the paper version, get it on Amazon. If you want the digital version, go to pitnews.com and go to the store, and you can buy the digital version. All right. It's less money. But if you like paper, if you like to get a paper book and you can lay it out on your desk, go get it on Amazon. All right. So that's my book. And it's got this is the whole book, the digital version. You can see it all down through here. It's got all this stuff. How many pages is that? 201 pages. All right. Lots and lots of charts and examples, how they all work, the different concepts, all that stuff is in the book. This is the foundation of trading right here. Everything you need to know. And then because once the book is done being written, right, and I got more to say, I created a supplemental. And the supplemental is 191 pages. The supplemental is as big as the book. So you get the supplemental too. And it's got all this stuff in here too that just keep following up. This is the one that we mostly using in the labs in our classes, right? So go get the book over on Amazon. It's got all that stuff in there. It's going to teach you how to do all this stuff. And then this is the pattern. Now, again, we follow up with that same pattern over here. This is our Wyckoff accumulation distribution model. So this was our accumulation down in here. Boom, boom, just like that. And then it took off, went up through all these little patterns up in here. Now we've gone sideways. We're doing this one right up in here. What comes after that? Does it always happen? No. Does it happen often enough that Lan Turner put how much? $250,000 on it? Yeah, it does. It happens often enough that Land Turner put $250,000 on betting that this thing is done going up. Now, it doesn't have to fall because I'm not just buying put options or going short. I put my money into TSLY, which is a hedge to the short side, and they're going to give me dividends. So even if the market goes up, I'll still get dividends. It just, hopefully the dividends will outpace the movement of the NAV if the market goes up. Otherwise, I get the movement of the market going down, plus I get the dividends. So that's why I like yield max, because we get to participate in the market direction if we're good at picking market direction. If you're not good at picking market direction, we'll just go trade. Well, you can still trade yield max, but you're better off trading yield max if you can do a little bit of market prediction direction picking. If you can't, just go trade yield boost, do the Granite shares, because they don't get to participate in the market direction anyway. So just let them sell cash secured puts against the market for you, because they don't participate in the market direction. Yield max does. All right, so the reason I'm taking yield max YQQ is because the market direction is down, and I'm thinking that the market's going to come down. Where? How far? Well, right now it just says to right here is our first target zone. So this yellow line right here is the 100 period moving average. So as you can see, that kind of goes right along with that natural little triangle wedge pattern at the top, and I'm thinking we're going to get a little drawdown in here, at least maybe down to this red line. That's our first target. That's our first target. Our second target is then come down here. See, this is the 200 period moving average. It's way down here. And that's the kind of the next target. So we look for that thing to come down. And of course, it's probably not going to go straight. It bounce around in here. But eventually, I think we're going to come intercept that 200 period moving average. I hope it does it slowly, because then I'll make more money. If it comes fast, I don't make money. I want it to come down very slowly. All right. Slow, slow, slow. I'll make more money if it comes down slow. And then we got the delta Kona probability off this entire run. Do we think it's going to come all the way back down to the full delta Kona probability? I don't know. Are we going to go to war with Denmark? I don't think so. I think that's all just a big rouge that's going on. But nonetheless, it does cause instability in the markets. So there's our 38.2 on this market right there. Now, we do have the 100 period number too, so we got that in here. This is another target point right there. So here's our target points for this thing to come down, and hopefully it does it really slow. I don't want any toilet flushes, just real slow drawdowns down through there, and that'll be really sweet and beautiful for my hedge. All right. Of course, it'll be bad for my long positions, but my hedge will help cover those drawdowns on the long positions. That's why you put a hedge on. And then I'll be making dividends on both sides. All right. So that's the name of the game, hedge. I think we're going to do it like that this year. Try a little bit of hedging. We didn't do hedging last year. We were just letting the dividends be the hedge. So we're going to try and do a little bit. You have to pick direction when you do hedging, because you're not sure when the market's going to go down. That's why I picked the yield max YQQQ, because it'll give me dividends on the way down, not just direction. Okay. Which is why we want it to fall slowly, not fast. Get better dividends if it falls slow. If you think it's going to fall really fast, you wouldn't want YQQQ. You'd want to just buy a put option, all right, on the Qs as your hedge. Okay. There you go. That's what we're doing. Okay, so now let's go in and look at the dividends and see what we're going to get. So we're just going to do a simple. I kind of want to go into portfolio matrix, and I kind of want to go into portfolio matrix and pull up QQQ. It's not going to really. It's not a fair analysis, because the market's been going straight up. And if you look at the YQQQ and then say, whoa, what is that's been doing in the past year? Well, we know it's been getting its hiney handed to it over the last year. So the gain, because the Qs have all been going straight up, well, the gain on the short position is going to be going straight down. So it's lost 27%, but it's only lost 27% when the market went straight up to the moon. So that's pretty incredible, right? Think about that. The yield on it was 24%. That's pretty awesome. So if you could have invested in the YQQ the wrong direction and absolutely done the total wrong thing, right? Think about this. If you would have sold right here, because that's basically what we're looking at. If you would have sold right here, not just got out, took a short position, meaning I'm going to try and make money when the market goes down. And the market didn't go down at all. I mean, it went straight up. Trump train, straight up. I mean, this thing took 2 Viagras. All right. That is a 2 Viagra. That is a 4 Viagra run. All right. 1 Viagra, 2 Viagras, 3 Viagras, 4 Viagras. It's a 4 Viagra run. All right. So this thing went crazy. And if you would have got, let's say you bet that the market was going to go down and you hung on to it the whole time and the market went up, you would have lost a lot of money. That's what I'm saying. If you'd have done that here. But if you do that in the Yield Max fund, you'd have only lost 2%. That's pretty incredible. That's why I don't have a big fear of putting money into this fund, this YQQQ, because during that run right there, which is short the entire time, it only lost 2%. Isn't that crazy? 2% loss going the absolute wrong direction. Now, it actually lost 27%, but the yield was 24%, kept giving you dividends off the options that they're selling. So the gain was only a negative 2%. So you think I'm scared of putting $250,000 in this market right here in anticipation that if it goes up, how much? It would have to go up that much again against my position to lose 2%, 2.5%. It would have to go up all that again, way off the chart for me to lose 2.5%. That's pretty safe bet. And if the market goes down, well, then let's just say I don't lose anything on the gain. Let's say I don't make anything on the gain. Let's just negative that out. Well, over the same period of time, I make about 25% annualized return. That's a lot of money. 25% annualized return. That's about double the S&P 500. The S&P 500's usual return a year, which is about 12%. So that's why I'm in this market. So that would be 24%. Let's go see what the dividends are. So the dividends right now are annualized yield 16%. So if we've got, it says that that's an annualized yield of 16.15%. That's what it gave the last dividend that went out. So we're going to come in here and we'll just do 250,000 times 16.15%. That gives me 40,000 divided by 12. I'll be making about 3,364 divided by 4. Let's do it by week because that's what I'm going to get. It's going to be about a $850 dividend every week. So just by having this sit here, and if the market just doesn't go up, right? If it just goes sideways or goes down, I'll be making about $850 a week on this market, just as my hedge. So that's hedging my long positions that I've got going in these other markets: AMD, NVIDIA, OARK, and Palantir, and gold. And of course, gold and AMD don't need a hedge. NVIDIA does, OARK does, and Palantir does. So these three need a hedge, but I don't have anything that directly hedges them. YieldMax doesn't have hedges for those three markets. That's why I put the hedge in YQQQ to cover those three. And I've got $200,000 in those. So I've got an extra $50,000 above so I got a perfect hedge on for those. Obviously, those are 100% hedged. Now, the thing is that they return more than QQQ. I mean, Palantir makes and loses way more than YQQQ. So that extra 50,000 will be a nice little buffer to help buffer some of the extra losses that might come from here. How's it going to work? I don't know. You can guess. I mean, you can see my model, see what I'm doing. We're going to see if it works. Let's trade it and find out, right? It's the name of the game. That's why we call this school. But this is real money. This is not This is not toy money. We're doing this with real money. All right. Okay, that's all I got for you today. You guys have any questions? Then let me know. What else? We got pretty much covered everything I wanted to cover today. We got our hedging. We got our Bitcoin. We sold out the Bitcoin. For those of you who came in late, we sold all of our Bitcoin, 100% of it, made $500. So the bad thing on that is that we sacrificed silver. We were going to get into silver and we didn't. We got into Bitcoin instead. We would have been better off being in silver. I screwed up, bought Bitcoin instead. But at least I didn't lose any money on Bitcoin. I just didn't make any money on silver. Okay. All right. That's all I got for you guys. We got the new version of Pit News Magazine coming out. Almost ready in 2 weeks. And we got class tonight at the university. So those of you who are able to make it to the university down at Utah Tech University, we got class tonight, second floor, room 204. So if you haven't signed up for that yet, call the university, ce.utah.tech.edu, and come and join us down at the university. And we will, it's a beginner class. It's just the very beginner class. What are stocks? What is the stock market? What are brokerage firms? What are charts? That kind of thing. It's a really basic introductory class this week. So come down, join us if you need that, and we will see you then. And we'll see you tomorrow afternoon. Tomorrow afternoon will actually tomorrow is going to be the first lab for the university class. So it will be tomorrow morning at 9 o'clock. So tomorrow morning, 9 o'clock, it's not going to be our day trading class. We're going to do our first lab, and we're going to go in and we're going to talk to our class. So come and join us if you want to come to the lab for the university class. And we're going to be talking about what is a stock market. We're going to go show them charts, and we're going to look at different markets, and we're going to look at different things that we talked about in class. So it'll be a lab tomorrow morning, 9 a.m. for the university class, and you're all welcome to come and join us. All right? It'll be fun. It'll be fun. All right, guys, we will catch you tomorrow morning at 9 o'clock, or tonight if you're there.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pit News Magazine.
Oh yeah, definitely subscribe to Pit News Magazine. You'll thank us later.